HDFC, in my opinion, India's most favorite, beloved stock. If I check 10 mutual funds for investment, if I check 10 mutual funds that invest in India, okay, 9 of them will have HDFC, right? Or maybe or 10. I'm just putting one less for to be on the safer side. But it's very hard to find a mutual fund that is an Indian mutual fund that invests in the domestic market that doesn't hold HDFC. So let's look what happened to HDFC and how I would trade HDFC if I were an investor. So the HDFC has fallen almost 30% from its all-time highs, right? And now it is currently at its 52-week low, near its 52-week low levels. And if you see, it has not returned any returns since 2020. People who invested in 2020 haven't had any returns. 2021 beginning, yeah, you could say that, right? Except for the dividend income. So this is how I would play HDFC. This is my opinion. It is not a trend recommendation. So I look at the daily chart. Here clearly it has done a double bottom. Okay. Now let's look at weekly. Again a double bottom, a tight double bottom. Here ek or here ek, this one. Now let's look at monthly. Again here there is a we can draw a trend line. In the monthly we can draw a trend line. Yeah, in the monthly we can draw a trend line. Beautiful trend line, right? So we can take this as a support. Now let's look weekly whether it supports on weekly. Weekly also it supports. Yes. So now my play is, how I am going to play the stock is, I would have bought it somewhere here. If Monday most likely will be a bullish day because they are saying they're going to sign the deal and all. So that would give some more support to this theory. So if I were investing, I would buy the stock on Monday and keep the stop loss below this candle. Matlab 726 ka low. Okay. Then I'll add some extra percentage. Let's say it opens on Monday at 800 levels. Okay. I will put the stop loss here. So that is 10%. I am aiming for 50% of this fall as the first target. Okay. So that is how much? 880. Okay. So that itself is a 10% return. So 1:1 risk. So if I'm entering at 800 levels, aiming for 880, stop loss is 10%. I am targeting 80 points. So 50% of this retracement is 880. Okay. So I'm getting 1:1 reward. And my first target is 880. Second target is the high, the all-time high, that is 1024, which is 20%. Let's look at it again. So if I am entering on Monday at 800, stop loss is 10%. Let's put 10%. I am going for 880. So that is 1:1 target. Okay. Then next target is this one, all-time high. Oh, that is 30%. Oh, that is 27%. That is almost 1:3 risk. Okay. And then my third target is all-time highs, and where I will trail the stop loss. So suppose if I invest 30,000 in this HDFC, suppose I invest 30,000, I will get out 10,000 here at 880, then another 10,000 at 1,000 levels, and remaining 10 I might trail it to all-time highs. Wherever I get out, I'll get out. That is my thesis. Maybe I'll alter it to 25% here at 880 levels, and 50% here, and remaining 50% I'll let it run. So 25 here, another 25% here. So I'm left with 50%. 50% I'll trade. So this is looks like a good trade for HDFC. Risk to reward is very good in my opinion. Again, this is not a trade recommendation. This is a high risk stock. Sometimes HDFC may gap down. That risk is always there. Stocks can always gap down. But if I get an entry over here at 770 levels, so this is 6%. 6% stop loss. Maybe additional 2% you can keep. So 8%. So here coming till here is how much? 8. Almost 1:2 reward. Okay. So almost 1:2. 1:2 at 880. And almost 4 times 1:4 risk to reward if it hits the all-time highs. For a large cap, I haven't seen such an opportunity in a long time. And next thing is, if it moves up by around say 5%, 8%, or maybe even 10%, I will revise my stop loss from here to my entry price, or my entry price minus maybe 1 or 2%. I'm not going to let it run till the low again. So that is how I'm going to play this day. And if this low is broken, okay, which is how much? 7%, right? 7%, 6%. If this low is broken, and another 22% I'll keep as a buffer, okay, around 8%. If it falls beyond 8%, it completely breaks this trend line, and it breaks down, then I will completely exit HDFC, because this is uncharted territory. This part is uncharted territory, and nobody knows where the next support will be, right? So if this trend line is broken, I will be out of HDFC. Because it's like I said, it's moving into uncharted territory and you don't know where it can go. Markets will be irrational more than you can stay solvent. Always remember that quote. HDFC may be a fundamentally strong stock, but technically, if certain things are broken, I will get out of the stock. Anyway, that is one thing. Also, because it's a large cap stock, this thesis that I have of reaching here and maybe 50% here, 50% retracement, and then eventually reaching here and then highs, that thesis can take 1 to 2 years to play out. So that is also there. So this is my opinion on HDFC, how I would play HDFC, how I would trade HDFC if I were interested in large cap stocks. But my preference is strictly micro cap and mid caps and small caps. Large cap, I am not so keen on large cap. Once in a while, I'll take large cap. But if I were, this looks like a very good play. Anyway, so this is my thesis for HDFC. So this is a high risk play. Do your own research. Don't trust anyone online. So subscribe if you enjoy this trading vlog and want to be updated for more such insights and want to be updated on more such opinions and trades we take. Chalo, bye.